welcome to another Mortgage Minute. I'm Matt Thomas, a local real estate agent, and this is Brian Dewald, a local lender. Brian, how are you doing this morning?
Great, man. Thanks for having me again. This is fun.
Yeah, absolutely. Brian, as you know, I'll explain to those who are watching, our Mortgage Minute, we try to hold every week, try to give updates every week in order to kind of combat headlines and just kind of lend some understanding to what's going on in the market, why the market is changing, why is, and maybe just kind of lend some clarity more than anything. And so, Brian, obviously the ultimate goal here would be to make sure that as people are watching this, that as they have questions, we would encourage you to certainly reach out. And in fact, I've got a link below in our description that would allow you to book some time with me to be able to talk real estate in today's world. You can do the same with Brian. We'll leave Brian's contact information. We would encourage you to reach out to Brian as well. And then, of course, to stay updated with each Mortgage Minute on a weekly basis, we'd love for you to hit the notification bell to make sure that you're getting these episodes each week. And that way they just pop up and you're able to see them. So if home buying is in your future, or if you even just have questions about that, whether that's the near or the longer term future in the next 3 to 6 months, I would certainly recommend staying in touch with what we're covering here today. So Brian, we obviously postponed our regularly scheduled meeting, I guess, today to wait to see what the Fed did. They had their big meeting over the last couple of days. And now the results are out. Brian, why don't you tell us about what's going on, with mortgage rates and what's in the news?
Yeah, so here we are on September 22nd. Yesterday, the Fed had their meeting. No surprise. This is kind of an interesting year because typically the Fed, it's a little bit of a guessing game as far as what the Fed's going to do. So they did increase their federal funds rate by 75 basis points, which is 3/4 of a point, or 0.75%. And so we knew that going into the meeting because they'd already spilled the beans. They've also spoken that they would like to see the rate a little bit higher. We're thinking maybe another 100 or 1.25%, anywhere between a point and a quarter by the end of the year. So we may see another, increase in November and potentially in December as well. So, to that tune, no surprise as far as what the Fed did there. What is a little bit of it's been a little bit of a goofy week with just about every market, whether it's, stocks or bonds or, your 401k or anything else. The thing that's a little disconcerting maybe is the word is that, and I've got lots of different stats and things that I can share with somebody on a one-on-one level and direct them to some links and stuff. But they're falling short of expectations, which has made every market just kind of goofy, right? Whether it's we've seen a few days where there's been a little bit of a gain just to follow up with some losses. So to kind of give you an example, anything from, GDP and inflationary numbers and stuff like that, there's an expectation that's sort of set. And then when the data comes out, they fall a little bit short of that, which markets are not reacting well to. So anyway, that's kind of
the fact that the news is almost being leaked out early and there's an expectation built that people are making adjustments to or guesses in the market to, and then when the numbers come out, there's then the reaction that follows. Which is that right? Yes, correct.
And they're kind of pumping the numbers up to make them look good. It seems like initially, and then they kind of backtrack a little bit. So, like I said, markets in general just haven't reacted well to that, including the mortgage market. So we've seen a few upticks here over the last little bit, but we are starting to see, this is sort of the good news, a pretty good spread when it comes to buying down the rate. If what we call par rate is, no points or fees or anything to, buy down the rate, the spread between the par rate and a purchased down or a bought down or a point, it is the spread between the two of those is one of the highest I've ever seen, which is good news. We're seeing more and more folks come in under contract with concessions from sellers, which is really helping us to, kind of buy down the rate at the seller's expense, really no expense to the buyer to achieve a little bit lower rate, which is great.
Well, and we were talking about, any buyer, when they buy a home, they're going to have their own closing costs. But then getting the seller to contribute additional closing costs that would be used towards buying down the rate can be very helpful. And ultimately that that buys down your rate literally for the length of your loan. Is that correct? I mean, that can be a savings over 30 years potentially.
Yeah, it's a big savings. And what a lot of folks don't realize too is that by having a lower interest rate, you actually, even though the payment's lower, you have a larger chunk of your payment going to principal every month. So
Sure.
from an equity position, if we look down at a year or 5 or 10, having a little bit better rate, especially at the seller's expense, it's great, is advantageous for folks for sure.
Well, and there's a lot of hope, obviously, that any rate that you might commit to now that it could be refinanced later, and obviously no one knows whether that's months away or if that's years away. But and certainly there's that hope. But in the meantime, might as well have more of your payment ultimately every month going towards your principal. That certainly makes sense. So the seller can do that ultimately for you, and we've talked about this before, where you might go into a situation where the seller is potentially contemplating or has contemplated and taken action on a price reduction. Well, if it might feel strange to them to give you $15,000 or $20,000, but if you could take that $15,000 or $20,000 and put it towards a rate reduction, or $10,000 even, could make a meaningful difference for you, make it more affordable, make it more attractive for you as the home buyer. The home seller then has it's the same effect. Whether let's say they were going to drop their price from $950 to $925. Well, if they gave that to you in concessions, or some portion of that to you in concessions to buy your rate down, they're coming out exactly how they would have if they would have just dropped their price. So it's really no effect to them, other than maybe they just don't feel like it. But if that's something that can be negotiated, and if it's understood by the agent and the agents involved, that can certainly aid the buyer. And then ultimately, again, it just works towards a better deal, because ultimately the buyer feels like things are more affordable. It's more favorable for them over the long term. So it makes sense. Now, Brian, what is a meaningful concession to work into a rate buy down? How much would you have to get, would you say, that would be meaningful?
Yeah, that's a really good question. A lot of it's going to depend on what's allowable. And by that, I mean, what kind of loan program and stuff we're doing. There's the more you put down, the more concessions you're allowed to have. But I would say anything in the, $10,000 range or more is going to make a really nice difference. In fact, 99 times out of 100, that will work better, whether it's 10 grand or 20 grand, whatever the number is. That would work better to get concessions and buy the rate down from a payment standpoint than just reducing the price. So it's a really cool way to do it.
Yeah. Well, very good. And that seems to make a lot of sense. So again, as we look for ways to make sure that, people can still feel confident about buying homes, that's certainly a great kind of a tool or mechanism that would allow that to happen with greater ease, for sure. And then ultimately save the buyer. Again, the cost to the seller is the same. So make sure that your agent is considering that. Make sure that your lender is talking about that. Obviously, we would love to talk to you about those things as well. So Brian, did you have anything else that you're going to go over today?
I think that covers us for this week.
Okay. Very good. Well, it's been obviously an active week with Fed news coming out and whatnot, and so we just again encourage you to stay tuned and stay plugged into this, and we will continue to update you every week. Again, look in the description for an opportunity to schedule some time with us, and look to reach out so that we can answer your questions directly. We're going to cover what we think needs to be said on a weekly basis, but we certainly we know that everyone's situation is unique, and so we would encourage you to reach out and discuss what that actually might mean for you in the things that you might qualify for, whether it's from a budget standpoint or a rate standpoint, whether there are tools and programs that would be advantageous for you in your home buying process. So that is what we are here for as local resources and experts in our field. So Brian, appreciate you being here every week and sharing your expertise. And I guess with that, we'll look forward to connecting next week.
See you next week. Thanks again.
All right. We'll see you.